Hey, everybody, Tom Gentile. I want to welcome you to a brand new podcast with both myself and Chris Johnson. I thought what we do today is, at first, we'd be remiss not to talk about the markets, right, Chris?
Oh my gosh, there's so much to talk about. You're right, Tom. We'll get to that, obviously.
Right, but we definitely want to talk about our backgrounds, why we got into this industry, and give you some takeaways, especially if you're brand new and you kind of need some ideas from folks that have been there and done this, even though it's been years since we first stepped into this arena. So, Chris, I think probably the best thing we could do is just start off with some background. So why don't you give the group, especially my audience, tell them a little bit about yourself and how you got started in trading and investing.
Well, first off, Tom, I'm going to start it off by making sure that we age each other. How long have you been in and how long have you been trading? I don't want to.
How about longer than I haven't?
That's not the right way to answer the question. It's a number of years. It's a numerical thing. It's greater than 10, greater than 20. What are we talking, Tom?
It's over 30 years now.
There we go. So we're both in the same category. Yeah. Okay. I'm 31, started in college. So I actually had my Series 7 when I was a sophomore at Ohio State, working as a licensed broker at Prudential Securities. So I go way back. It feels way too long ago. I got addicted to trading, I think like everybody else did, with just that first win or two, where you realize that, oh my gosh, I don't have to work my hands to the bone, but I do have to put some work into it. And the thing that always caught my attention was, and I use this term today, as long as you're prepared, as long as you're out there preparing yourself, you can master a market. Luck prefers a prepared trader is what it comes down to. So education, getting the right tools, all of those things. It's one of those things. I'm a numbers nerd. I think you know that, Tom. I tend to dive into the numbers. So there's no better place. It's number rich than the stock market. So it came naturally for me. I started as an engineering major at Ohio State and was told within 2 quarters I probably wasn't going to make it because I didn't like differential equations. And the finance person there opened me with open arms or welcomed me with open arms. And from there on, as they say, it was history.
Chris, for me, this is a very boring industry when you go outside of what it is you and I do. I mean,
yes.
Quantitative analysis is, I think it's exciting, but I have a team of programmers that do all that. I like the aspect of trading. I like the aspect of winning as a trader. I like the aspect of being right when the herd is wrong. But at the same time, you have to keep those emotions in check. And we're going to get into all of that in the coming weeks and maybe even the coming months. But for me, I was, a lot of people know my story. But for those of you that don't, I was 21 years old, and it was the year was 1986. And at the time, my parents would not sign the brokerage account because I got started like a lot of people do. I received something in the mail, I responded to it, and I'm like, wow, this is exciting. This is what I want to do. It looks like a great way a great barrier, or there's no barriers to entry, which ended up being, believe it or not, my biggest problem. If you're a surgeon, if you're a pilot, you have to go through hours and hours and weeks and months and even years of training before you get to operate or before you get to fly that aircraft. And with trading, there's no barrier at all. All you need is some money and a brokerage account, and you're trading. But it doesn't mean you're trading successfully. For me, in a nutshell, I started in 1986, and I was quickly, let's call it, executed. The day after the stock market crashed in October of 1987, October 19th, and I was out of business as a trader on October 20th. So I took a year off because A, I didn't have any money. B, I actually owed money to the brokerage firm. I went into maintenance margin requirement, which I couldn't meet. So I actually owed the broker money. And I always tell the story that if you really want to have a personal relationship with your broker, owe them money. They'll call you every day. to get their money back. But so that was one that, believe it or not, that was the best thing that ever happened to me. It was a gut check, number one. Number two, it took me a year to recapitalize. And during that year, I decided I'm going to learn how to do this successfully. So here we are, 88, 89, going into, and in those areas, in those years, I started trading things that I knew because I read a number of books, and a lot of them out there were invest and trade in things you know. At the time, I was working for Home Depot. And so, this stock was on fire. It was already trending in the right direction. It was always beating its analyst estimates. And so I thought, all right, this is what I'm going to do. And so, that started me. And from there, and I'm going to leave out a lot of things that we'll bring up in later podcasts. But from there, I went to the American Stock Exchange, and I learned it from the floor side. And I went to go work with an individual, which became my partner, which he and I and a couple of others co-founded a company called Optionetics. And I really took a lot of the strategies we learned on the floor, expanded the time horizons, and moved on. But the big thing I did that was the biggest change from being the guy who was the gambler back in October of 1987 to the person I am today is unemotional pattern trading, rules-based trading. And that's really, if I were to take three words that describe my trading, it's rules-based trading. Chris?
You cannot get away from the rules, Tom. I mean, you just, and bringing up Optionetics, that is kind of a blast from the past for me. I can remember doing business with Optionetics and Options Express, and when options were really coming up the curve, if you will, in the late 1999s and 2000s. And that's when you learned that, rules, whatever they are, rules-based trading. I love that. Rules have to encompass every step you make. When you put a trade on, when you take a trade off, what is your next step? It should always be based on a rule. I've developed my 10 commandments of trading. And kind of in a sleight of hand, there's an 11th, which is sometimes you always break the rules. Sometimes there's always an extra rule. And that's part of trading, is you have to adapt and overcome. But if you don't have that baseline read of those rules that you're talking about, you are left wandering around looking for a way to manage a loser or get into a new trade. And it's just one of these things that if you don't start from that baseline, oh my gosh, it is such a hard road to travel.
It is. It is. And, for those newcomers that are coming into this arena for the very first time, or if you've been, trading for less than a year, and there's a lot of Robinhood traders out there that I'm talking to, and there's a lot of, the TikTok investors, the TikTok traders that are approaching this, I think a lot in some senses the wrong way. Because when you ask these folks, and this is the very first question that you should ask yourself when you're coming into this area, is what do you want out of trading? Because most of the guys that are Robinhood traders just coming in with small accounts, or the TikTok traders, they're going to tell you their answer is money. What do I want out of trading? I want money. Well, that's the end result. Okay. But if money is the answer, to me, run, don't walk away from this business, because money is the result. It's not the reason, and I say that out of experience, because that's what I wanted. When I first got, interested in trading, it was about the money. It was about the lifestyle. It was about the guy in the hammock. And at the time, the guy in the hammock was on his BlackBerry. and even before that, it was the Radio Shack computer. But money is kind of the icing on the cake. The problem that I see with money is that it has an emotional value for just about everyone and everything. Think of yourself, Chris. I mean, when you first got started in trading, I imagine that's probably the outlook you were looking for.
Yeah, you know what? Mine was a worst case scenario, Tom. Everybody wants to. I mean, if you ask somebody why they're doing this, if they're not saying money, then there's kind of a problem. I mean, it can be fun. And for some people, it is a game. I mean, there's strategy with it. There's a win, there's a loss. I mean, if you look at it, it's no different than a hockey game or a football game. But
Mhm.
money is the win. So if you're coming into it without any type of objective to grow that account, then why are you getting involved at all? And I'd say you probably shouldn't. Go and do something else. Let me
Right.
rewind it for a second though, because you hit a nerve with me too when you brought up the TikTok and the Robinhood investors. And obviously, we've seen something that has just turned the market almost upside down in some areas over the last year. When you look at what happened with the Robinhood investors, specifically in April, June, May, when they were buying stocks that you and I might look at and say, well, there's a fundamental problem here. Hertz is going to go bankrupt, or XYZ is going bankrupt, and people are lining up to buy the shares because all of a sudden it has become a phenomenon. Or one of the words you brought up, the herd is buying it. And the problem with that is, unless you're the first cow in the herd, unless you're the first one that's running through that gate on the
Mhm.
breakout, you're just not going to make the amount of money that you think you are. And that herd mentality, I think, is what has kind of turned that fear of missing out and all of these things has kind of turned the market into a little more treacherous landscape over the last 6 months. And it's evening a bit out now because the same thing that you brought up, that idea of your broker calling you and saying you owe me money, is now happening to some of these people, and it's not pleasant. I've been
Oh
through it.
yeah.
It's the reason I don't short stocks anymore. I just buy puts because I've had those calls from the brokers. But that
See,
those couple of things.
and we're gonna get into option strategies more and more with these podcasts. But the one thing that I want to make sure that I let all of my listeners know, and all of your listeners know as well, is that I think there's a right time to do everything. Now, shorting stock, not something that I'm not comfortable with. I've done it. I actually did it. I've been, in the last couple of months, I've shorted Marriott. I shorted a lot of the sin stocks, stocks in Las Vegas, as they were reopening, those little pops. And I was looking at buying puts, but they were just too expensive, and I didn't want to sell calls. Although that might have been a better strategy than actually shorting stock. But where I'm going with this is there's always a right time to do any strategy out there. The problem I think a lot of people do is they bite off more than they can chew, and it comes back around to that emotional value. And Chris, there's a reason why you exchange money in Las Vegas for chips, or for chips,
Yep.
because when you're moving your stack of chips into the table, whether it's roulette, whether it's the big six wheel, whether it's poker, blackjack, whatever, you have less of an emotional value on a piece of plastic that's round than you do if we were actually putting dollars, real dollars, into the middle of the table. You'd think twice a lot of times before shoving real money in, because money has an emotional value. That's the reason why chips are in Las Vegas, because they're easy to keep track of. And the other thing is they have a slightly less emotional value to the person that's using them, because they've already exchanged their money for those chips. And the problem is you can't equate that into the market, and so we've been trained our whole lives that money can buy different things at different times.
Yeah. Well, you know what? Let's parlay that. And that was a pun. Let's parlay that conversation for a second. The entire idea that you just brought up of people having some skin in the game, there is a relationship in the market that you can draw that exact parallel with. And that is an investor poll or even analyst recommendations on stock. When you see people, and IBM is one of these stocks that I hear everybody tell me, you have to own IBM. You should buy IBM. You can buy IBM for $124. You should buy it right now. The other one is GE, General Electric. You should own the General right now, as it continues to trade lower and lower. One of the things I am quick to ask people is, well, how much do you own, or when did you buy it? And usually the silence is deafening. If somebody tells me, well, I don't have it, I just read it and thought that I should buy it, it's that exact thing of not passing money across the table. And we're in a, again, going back to the data in the market, we're in a unique spot, you and I, where we can look at option volume and open interest and all these tools that we have to say, look at how much money has been put on the table on this particular stock.
Oh, yeah.
And I think I, I mean, I've got so many stories. I had a cabbie once when I was going to do a CNBC interview up in New York. When he found out what I was doing, he ripped through 6 or 7 stocks, and it was Microsoft, Intel, Apple. This was right at the top of the dot-com bubble, and he was telling me what I needed to talk about. And the same question came out. It was, well, how many of them do you own? Well, I don't own anybody, but everybody loves them. And that was the point where I kind of had the scratch the record moment and said, oh my gosh, we're near a market top because everybody's telling me what to buy, but they don't own it themselves.
Chris,
look out.
Do you know how many Uber drivers do it just for fun because they're really financial advisors or my God, the number of cars I get into. I mean, when I don't want to have a conversation about it, I just simply tell people I'm an insurance salesman, which is basically
I'm a veterinarian
when I'm selling puts. But yeah, I mean, I agree. The whole skin in the game thing, and then. It becomes emotional. Like I always tell people, you get exactly what you want out of trading. You want excitement, then throw more money on the line than you need to. You'll get excitement. I got a guy who's been texting me or commenting on my message boards. He is definitely on the roller coaster ride. As things are going higher, I'm a genius. And even today, as the markets pull back this morning, he's like, please advise me ASAP. I'm down so much today on my options. What do I do? And of course, I don't comment on the upswings and I don't comment on the downswings because that's something that this individual person has control over. I tell people, you don't have control over the markets. You only have control over what you put in, when you get in, and when you get out. You have that control. Everything else, no matter how good the patterns are, no matter how good the quantitative analysis is, your statistical probabilities, or whether you're just using guesswork and thinking and hopium, as I call it, whatever it is you use, you lose control the minute you put your money on the line until you take it off. Those are the things you have control over.
It's almost like putting your kid on the bus in the morning for his first day of school, his or her first day of school.
Exactly.
All the preparation in the world, but as soon as your child gets on the bus, you hope that it goes as planned and as researched, and everything that you put into it comes back to that your child coming home, and that is your win.
Well, and you have your preparation. The more you prepare, obviously, you're going to be in a better situation than someone who has done little, if no, preparation. But you're absolutely right. You could prepare, with anything in life. You could have tons of preparation, and it doesn't mean that things are going to just go your way from the get-go. So,
correct.
Chris, let's do this. Let's finish up on this topic and let's talk about the markets because, I know you want to get into the markets before Election Day. I do too. But, I think to finish up on this tidbit of information that we're doing on our first podcast together, I think, what do you want out of trading? My answer is this. I think you got to trade. You look to trade as something you love to do. When I visit people in whether it's a Home Depot or a Walmart or, I'm in a restaurant or wherever I am where I'm interacting an employee of that facility, you can always tell the ones that love what they're doing from the ones that wish they weren't there. And I can't stand, someone who I'm paying money to just not wish they were, wish they were anywhere except helping you. And so I know I love what I do as a trader. I love what I do as a teacher. I see the same thing in you. You have to love what you do as a trader because if you want to better yourself, That's the first thing. Love what you do. Profit's the goal, guys. It is. But, Chris and I both know this. Too much greed, like anything, it can ruin a good plan no matter how much you plan. If you desire to be a great trader, you got to keep that on your mind. That's what keeps successful traders consistently profitable. This morning I woke up and markets were down. And I'm like, all right, yeah, I'm off a little bit. It was that comment that got me looking at the markets this morning, because I don't tend to I don't micromanage my trading account. If you micromanage your trading account, you got too much on the line, in my mind. But I looked, and my account was down 0.17, 17, what is it, 17 100ths% today.
Yep, 17 beats.
When the S&P was down a percentage point. So I had like 17% exposure at that time to the downside of the market. So I felt fine. Now I'm up. I mean, I'm just looking at my account now, and the markets are still down on the day. In fact, as of right now in this podcast, S&P is down about a half a percentage point. I'm actually up on the day, and it has to do with, in some cases, the way I'm trading and what I'm trading, because I'm not just buying and holding. I go against the conventional wisdom of trading and investing, and I know you do too, Chris. But what you want out of trading, folks, again, the best thing I can give you is it's just like anything else in life. You got to love what you do. And to love what you do means you got to master it as best you can. A baseball player who's a great ball player, if they're a pitcher, they love what they do. They've probably been doing it since they were a child, and they've mastered every single pitch. They want to put that ball anywhere on the plate. On the corners is the best place to put it, because you're going to get a strike, and you're going to be making your batter constantly confused about where you're going to put that ball. The last place a pitcher wants to put a baseball is right down the middle. That's the worst place you could put it. And so you want to play those gray lines. And to me, it's the same thing with trading and investing. And to me, buying a stock for whatever reason, in a lot of cases, as a trader, not as an investor, but as a trader, buying a stock is like throwing that pitch right down the line. It could go either way. It has the greatest chance of going against you. But if you take an option trade, and you know what you're doing, and you have success, you've really successfully placed that strike price and that expiration where you want it, then you can. It's almost like throwing that pitch down one of the one side of the baseline. There's less chance that someone's going to hit it against you, and that you will strike. In no pun intended, as an option trader. But that's my idea of what do you want to get out of trading, and I did get a little bit detaily there, but Chris, it's what is it, 19 days? You said 18, 19 days for the election.
19 days.
What are you spotting? What are you seeing? What do you like?
One of the 10 commandments of trading, or one of my 10 commandments of trading, is that volatility equals opportunity. And I think that we are walking into a period over the next couple of months that is just going to open the doors of opportunity for everybody here, Tom. Regardless of what you trade, whether you trade stocks, whether you trade bonds, whether you trade options, we're looking at something that is unprecedented, really. So I'm excited. And I think, as any trader should be, I'm also a little concerned. If you lose that concern, then there's something wrong. It's almost like the race car driver that loses the edge and thinks, well, I can beat anything. I can do whatever I want. If you become that way with a trader, you're complacent about it, then there's something wrong, and you need to take a break, pump the brakes for a little while. But I look at this as not necessarily what is going to be the outcome of the option, or of the election rather, but what's going to be the outcome of the portfolio, which I think is kind of what you're describing here, Tom. It's not necessarily what the market is going to do. It's what I'm going to do, which is why I have a love for this sport. But to wrap it up, it is I think the herd mentality that we've already mentioned, this fear of missing out, all of these things have kind of wrapped up to make a situation that's going to be so interesting to watch and interesting to trade over the next, not just 19 days, but the 40 days, the 40 trading days after that.
Oh yeah. Yeah.
So
I did a video. This was about a week ago. And I was talking about a couple of stocks that I really like heading into the election period, and they were sin stocks.
Hold on a second. Was this the debate video, Tom?
Yeah, I believe it was.
I loved it.
I'm not Chris Wallace. Yeah,
I'm not.
but I did talk about a couple of stocks. Philip Morris was one that I thought, smoking. I was looking at smoking, eating, and drinking because that's three
Mhm.
things people are going to definitely be doing as they're glued to the television sets that first Tuesday in November, and even going into the elections. But Philip Morris was one I liked. I like Papa John's Pizza, and I like Starbucks. And of the three, Starbucks is actually pulling back on me a little bit, but the other two are kind of moving in the direction I'm liking them in. But again, this is an idea that I have based on pattern recognition, and also based on some stocks that I think are a little bit more geared toward what I like to call random distribution. That means that they don't necessarily go up if all the market goes up. They don't necessarily go down if the entire market goes down. They seem to correlate amongst themselves. And so I wanted to throw that out there to the group before we wind up our first podcast today.
So those are your three. I've got to throw three or four out here because I'm looking at the not on the election, and I love the visual, Tom, of you sitting on a couch eating pizza, smoking a cigarette, and drinking a cup of Starbucks while you're watching the election results roll in.
Well, it would be if I'm gonna. I don't smoke. If I'm gonna smoke anything, it's gonna be a nice Cuban cigar. But
There you go. The visual that just came with that trifecta of stocks. I'm kind of looking a little bit beyond that. And I'm also including when I talk to, my people, a little bit of a look towards I hate to say it, but this recurring idea, or maybe it's already here, of the pandemic kind of assuming its position in the role of what the market is going to do over the last part of the fourth quarter. And when I think of that, I go back to those same stocks that I played through that May, June, and July. Companies like Dick's Sporting Goods, companies like Etsy, which I think is going to be a great one because you've got the holiday season here. It's a great way for people not only to make money, but for you and I to buy things. I use this great story. Tom, I'm building a canoe. I'm literally building a canoe in my
really, are
garage.
you like
Yeah.
carving it out of wood?
I'm using cedar, so I'm using cedar slats that I bought,
Okay.
but I have to steam them. I have to form them around it's a fun process. So when I started the process, I looked on Etsy and there was a canoe that was similar to what I was going to build. It was $1,500, and this was December of last year. By the time I'd procured all the things I needed to build the canoe, I looked on Etsy again, and the price was $3,500 for the same canoe.
Hmm.
So there's a true marketplace in Etsy that is very reflective of what's going on with our economy and the pandemic. For that reason, I think that, Etsy and PayPal and eBay, even everybody thought eBay was dead. eBay's making its resurgence. So companies like that are where I'm looking right now for those great opportunities into the end of the fourth quarter.
Yeah, and those, you know what? All of those, except for, I mean, Dick's Sporting Goods, I don't agree with you on. That's just my opinion. And one of the biggest reasons is because they stopped selling shotguns and ammo,
Ammunition and shotguns,
and
yeah.
so
Yep.
they took a lot of their group right out of the picture in terms of their customer. But Etsy, yeah, I mean Etsy, PayPal, eBay, these all have that work from home, play from home, and even buy from home. Which is where we're going, and I don't think this is a short term thing. I think this is a whole new normal. Even vote from home is going to happen, and we're already talking about the millions of people that have already voted early. I don't even think they've realized that this is the not even the crest. This is a ripple compared to the wave of mail in votes that are coming. They're going to be in the coming weeks. It's going to swell like the third quarter earnings that are happening. This week was kind of the start, and the next week's going to be a little bit more. By the time we get into that third week, that last week of October and into the first week of November, that's when the crest happens in terms of earnings. I think next week we're going to see a crest happening in terms of of mail-in ballots. So people are doing all these things from home now. And, when you look at some of the industries that are just kind of dying, and I feel bad for a lot of these folks that have worked at these industries for a long time, but there are just as many industries that are growing out of this, that are at-home industries and
Oh,
mobile
absolutely.
industries. It's just a matter of opening your eyes and seeing this. And as a trader and investor, we see it, and we want to capitalize on it a completely different way than someone who's looking to break out in that job market in that area.
Yep, absolutely. So speaking of breakout markets, and we can kind of wind down the discussion on this one, but when you look at the alternative blanks, it can be alternative energy, it can be alternative vehicle. That is one of those areas that not only I, but all the people that I talk to are just all over. Any favorites out of that group for you?
There's three that I'm looking at right now. I think that they might make better option trades than stock trades, and that's the electrics. Tesla, obviously the big one that everybody knows about. But then when you get into the other electrics, Nikola, which is just that one's an option seller's dream, or at least it was.
Oh, yeah.
I know. I was
Yeah.
part of that option seller's dream because I could not believe the premium that you could get for Nikola just a couple weeks ago. And I think a lot of that had to do with, what was it, the video of them rolling the truck down the hill and trying to claim that
Correct.
it was driving on its own. But then, so that might still have some energy left in it. And then there's Workhorse, which is the company that's geared up to, I guess their whole claim to fame is they're going to replace all of the U.S. postal trucks with electric versions. And of course, if anything happens in the post office, it happens slowly. So we'll see where that ends up going. But those are three which I'm not calling them buys by any means. I'm just calling them watch these, because there could be some very good opportunities for the option seller on those three stocks in that category.
Right. Well, you hit on one which, I have to give obviously that full disclosure. Workhorse is one of my favorites. And you should smile when you say that, Tom, because it's a Cincinnati-based company. And they are more than just the U.S. Postal Service. They've got a contract right now with UPS. But man, to see a company that is putting that one of their prototypes has drones in the top of it, Tom.
Yeah.
So they can load up 6 drones, and as soon as the FAA says, of course, they can go out to a neighborhood like mine and just boom, these go out, deliver the packages. But I think Workhorse is at the top of that list. And if I have to round out a couple more of them, you have to look at Blink. And it is too late now to get in. This is one of those sawtooth strategies, and we can talk about that sawtooth strategy that I have. But Genco Solar, you've got to be looking at a lot of these alternative energy stocks. JKS, and it looks like Tesla. It looks like something that Elon Musk just launched from its launching pad a couple weeks ago. And it's a little bit out of reach right now, but I think it is all part of that movement that is the not only clean energy, but that movement towards just alternative energy altogether, whether it's driving down the road or powering something. So something awesome. I think that we should keep an eye on. Yeah.
Great. Well, hey, Chris, thanks for being part of our very first podcast together. Guys, we do a podcast every week called Trading Out Loud with Tom and Chris. And again, if I were to kind of summarize today, we really just kind of talked big picture and what Chris wants, what we wanted out of trading, what you want out of trading, and what we feel the best area to approach that would be, as well as talking a little bit about the markets heading into election. Next week, I'm going to dive into a subject called what am I going to sacrifice in order to get to my goals of trading. That right there is going to be a very interesting topic, because you can't have success without sacrifice. And so we'll talk about what that means. We'll also get into a couple other things as we approach the election day. Chris, thanks a lot, buddy. Appreciate you doing this with me.
Always, always, always fun talking with you, Tom. I'm looking forward to next week.
Awesome. And thanks, everybody, for joining us on our first podcast. We'll see you again soon. Bye now.